Hi, everyone. Welcome to the 138th episode of the Timing Research Show for May 15th, 2017. My name is David Kosmeter. I'm the creator of Timing Research. Today we will be talking about the 190th weekly report. If you haven't had a chance to take a look at this yet, just go to TimingResearch.com and you can download this or any of the past reports there. I have Dean Jenkins back to host today, so I'm going to go ahead and turn it over to him.
All right. Well, thanks, David. Thanks for inviting me back to host again. I always look forward to the show. I enjoy it. Get to interact with some other trading experts and hear some other opinions. And sometimes we all agree, and sometimes we agreeably disagree. So it's always fun just to hear some different opinions. So 190 shows. Look at that. You gonna do something special, David, for the 200th one?
190 reports. I started doing the reports about a year before I started doing the shows. So it's the 138th show.
Okay.
But
day next year.
yeah.
Well, definitely start planning the party. All right. Well, we got a good lineup today. Yeah. There we go. Yeah, so we got a good lineup today, and I'm looking forward to hearing from the other panelists. And so I want to take a minute to have them just introduce themselves real quickly. Each of you introduce yourself, talk just briefly about the service you offer before we get into taking a look at the market and some opinions there. So Larry, if you would tell us who you are, what you do.
Okay, well, thanks again, David, and for having me, and Dean for being here to oversee this event here today. Yeah, so I've got a trading educational site called Power Cycle Trading, and I've been in the markets trading for over 30 years. Started out trading cargoes of crude oil, was in the oil side of things for a long time, run a big energy trading group, and then split off, and my whole thing is pretty much options, but using directional trading models that I've developed for trading, and then using options, for more defined risk type trade setups. But so I have an educational site, Power Cycle Trading. We do a lot of different types of trading setups, either anything from seasonality type trades, which could be commodities, to a lot of the different option strategies. Whatever's looking to work, we'll do it. So, for example, this week we're getting into monthly option expiration. So we'll be looking at kind of premium selling strategies to take advantage of, the monthly option expiration. So try to, pretty much use options, but, direction is where it's at. So have to use that, define that first, and then options to trade. So check us out at powercycletrading.com.
All right. Thanks. And I know we've been on the show together a couple times. Always enjoy it. So it's good to be back here with you.
Thank you.
And I love options. I love options too. I'd rather, if I didn't have to buy a share, I'd be happy. I just trade options, man.
Yeah, exactly.
Yeah. And you must have nerves of steel if you were a big oil trader. Oil is wild, especially lately.
Well, it's relative. You get that's what I grew up with, so you get used to it. But actually, as an oil trader, you get pretty bored with it. So I was really excited to be doing other things, because oil it's the same old thing over and over and over. You get a good looking downtrend like we've had the past few weeks, and then OPEC's going to start coming in and talking their book and talking things up, and I don't know. So I actually find it more fun to trade the equities. There's just more different things you can do versus just trading an oil commodity. So it is interesting, but
Yeah. And there's more to look at, right?
Exactly.
Oil's one thing, right?
The same thing over and over. So you can look at Teslas and all these things that are moving, exciting, like we're talking about the Bitcoin and all that kind of stuff. So it just opens up so many different doors.
Very good. Very good. Well, Michael, I've been on the show with you a few times. It's been a few months since we've been here together, so it's great. And why don't you tell us, just introduce yourself and what you got going on?
Who did you call?
Michael. Yeah, you.
Oh, hi. I'm Michael Filighera. I
am the owner and operator and trader with LogicalSignals.com. And right now we're revamping our website, and it's still online, but I'm transferring it to a new host, and I'm going to be adding some additional things to it. I'm shifting my focus. I focus on day trading, and I actually do trade crude. I'm having a lot of fun doing it. I agree with what's already been said and what can happen with that particular market, but I'm finding that the type of trading that we do and the algorithms that I use, we're going in to just grab either just the small intraday trends or how things shift around, and we take advantage of that. And we're not carrying positions. Understand what is being said about trading crude options, because it's become very heavily algorithms. And as long as those algorithms are moving in and out of the market, it can keep things tighter and make it a little bit more difficult for a lot of the retail guys or people to come in. In any case, right now, my primary focus are crude, gold, the S&P, the NASDAQ, Dow. I also add the euro because it kind of sits up there towards the top and truly affects what's happening in our bonds and what's happening in the gold and crude markets. And that's about it for right now.
All right. Well, thank you, and good to be on the panel with you here. And we'll look forward to your outlook on the market when we get there pretty quick.
Thank you.
Neil, been here with you before. It's good to be back on the show with you. But,
Yeah,
tell us who you are, what you got going on, Neil.
sure. A website called Trader Review. We do stocks, we do options, ETFs. We'll often use triple leverage ETFs, commodity ETFs like gold, silver, oil, and currencies. And recently had our biggest winner of the year, 390% on the British pound call options, and would have been 100, but luckily they called the in the UK on the week of expiration, and the pound absolutely surged. So that was a real bonus for us. I love doing what I do because I used to be a broker at a major firm, only for a year, but you learn the business, do all the training, you get the free lunches. And what I learned there is you have a trade idea, you have to call all your clients, give them the same explanation. And by the time you give everyone the explanation, the move has already started. And so it's just really can help people doing what I do now. They taught us that you're in the business of gathering assets, not necessarily money. And the best thing a stockbroker can ever do for you is to keep you from selling at the bottom. And that's one thing that they will do. The crash of 2009, they're not going to say, you know what, market's down 65%, you might as well get out. They're not going to do that. At least they'll save you from that. But they're never going to get you out of the top. They're never going to do that. And so you'll have these massive crashes, 2000, 2008, 2009, and they'll never get you out. And, you know, I think we might for a bull run of 10 years. I mean, it's really possible. So you know, you use the typical model that they have, you could be okay, but when crashes come, they're almost certainly not going to help you. So I love doing what I do.
All right, great. And I echo that. I got the best job in the world. I get to trade the markets and talk to other traders and teach some others that want to learn. And I just enjoy pretty much every minute of it. And you know, your comment about brokers, you know, probably financial advisors, you know, I'm only going to pay somebody if they get paid, if I get paid. Right? I don't like the business arrangement where they make money even if I'm losing a lot. That's something wrong with that model for me. All right. Well, hey, great to be here with all of you again. And now we're going to take a look at our predictions for the market. David's report using his survey and magic algorithm. So the Timing Research is predicting a 55% chance that the S&P 500 will go higher from Monday's open to Friday's close. And I was just looking over, you know, your report, David, and like a month ago, your track record for the report and the prediction was really good. It was trending up, right? In a 12-week record, you were right like 54% of the time. But it's slipping, man. It's slipping. So now it's only 27. So the question about whether crowds can predict markets, a little tough, right?
Yeah. So that those percentages on the top of page 2 is for the user or for the survey sentiment on whether the higher number.
Oh,
that's
the survey
separate
sentiment, not the David's outcome from
Yeah.
from the model. Gotcha.
Yeah.
Gotcha. Okay.
I remember one time though, everyone was super bullish. It was like way in the 60s that the market was up for the week, and almost every panelist that we had on said the market would be down, and the market went down. So you got to be careful when it gets like 2 standard deviations from the mean. It can be a contrarian, I think. You know what I mean? If every like 100% of respondents say the market's up, you got to think, something's happening here.
Yeah, that's what what I call the forecast prediction is on the first page. That's where I look at similar conditions in the entire history and say, make or show what's happened in the past in those conditions. So yeah, in certain situations, the overall survey, like whatever the overall sentiment is, has shown to be wrong more often than it is right. So that's what the forecast prediction is meant to show.
Okay, cool. Thank you. So your conclusion, 55% chance higher for this week. And so what we'll do is go through each of the panelists and ask you to give your prediction from Monday's open to Friday's close. Do you think the S&P 500 will close higher or lower, and what's your confidence for that? And then once we go through and get that all tallied, then we'll come back around and you can give a rationale for it. So don't give that away too soon. All right. So we'll just keep with this order. And Larry, what do you think? Up or down? What's your confidence level?
Yeah, I think up a little bit. I think we're going to go out kind of close to where we are right now, and I'll give you the reasons a little bit later. But in 65% confidence level, slightly higher. I'm not saying big higher, but just a teeny weeny bit higher.
Okay, teeny weeny bit higher, 65%.
Yeah.
All right, Michael, what do you think? Where are we going?
I am going to be very similar to what's already been said. I also believe higher. I'm not looking for a lot. And I'm going to give it I'm going to go with the crowd and say 55%.
55%, okay. No screaming bulls yet. Right, Neil, what do you think?
Yeah, I'm gonna
go. You got 2 for 2.
Yeah,
I got 2 for 2 here.
I'm gonna go higher. I got to give my explanation later, right? Okay, I'll give the explanation later.
Yeah.
I'll go like 60%.
60%. Yeah, so nobody's exuding confidence, right? About high confidence and huge highs. So I'm and not just to be contrarian, but I'm saying lower. And I've got a good 65% confidence that we're going to end up closing lower. And again, I'll be able to defend that position here once we get into it. But so I'm all by myself, right? I sit down 3 up, and I'm down at 65%. All right. Well, it's good that it's not a sweep, right? Somebody's got to be have a different idea here. All right. So this let's go back around. We'll start with you, Larry, and this would be where you show a chart or phases of the moon or whatever it is that you use to determine that about your defend your position for the market going higher.
All right. Well, I like to look at a couple different things. First off, though, we're into monthly option expiration. So 3rd Friday of the month, and the tendency has been for the markets to kind of grind a little higher and kind of be kind of flat. but kind of grind higher has been kind of the tendency all year for the monthly expirations. And then if you look at the markets where we're poised as far as price, we're back up to that key level of 2,400 on the S&P. The NASDAQ has done its thing and keeps making new highs. But the S&P, SPX is right there at 2,400. And then if you look at monthly options, the chain, you'll see quite a bit of pretty decent open interest around 2,400 to 2,401. And then on the SPY, you'll see kind of the same kind of line up 240 to 241. There's some pretty heavy open interest. So I think it's going to, a lot of these, the expiration for the monthlies will kind of go out in this area, but, slightly higher perhaps, see if we can get over the 2,400. And then I think, once you get through a monthly expiration, it's the next week where you get usually the price action. So, and then the last point is I like to look at seasonality, and the seasonal patterns this time of year are usually just very, very sideways, kind of flat to just a tiny bit pushing to the upside. And then next week on a seasonals is when a lot of times you can get a little bit more of a pullback. So that's kind of my rationale.
All righty. Looking out, I don't think there's any big news. So the option expiration may be the biggest thing in the market because, the Fed did their thing last week. Earnings are starting to wind down. France has a new president. I don't know of any big planned event coming that could be market moving. Certainly unplanned things could come hit us in the face. But so Michael, what do you think? Have you got a chart you want to show, or just give your rationale?
Actually, I'm not going to be able to put my chart on this particular computer. I have it on 2 other computers. But again, I agree with what Larry said. It is options. The monthly options expiration is this Friday, and with the markets being so close to their all-time highs, with the NASDAQ already moving above, and the S&P sitting right there, my call for only giving it a 55% probability on my side is due to the fact that it is the expiration, and it really is going to depend on where it ends up on Friday. So if it doesn't really go beyond its current highs, and that's on the Dow and the S&P, then I think you're going to get a lot of option traders who are going to be very satisfied with their positions, not necessarily having to cover them going into expiration. And maybe they come out of expiration short, and they're going to be just as happy to do that. I think it really tries to pop over that level and maybe ends up closer to, say, 2410 in the S&P, or even 2406, 7. Then I think you're going to get a lot of switching out. People are not going to want to go be carrying short over that expiration, so they might be covering their assigned options before it actually goes out. And that, I think, is we're going to have to wait and to see what the activity will be on Friday. Again, I agree with you, Dean, in that we don't have any major news coming up this week. I think we have a lot sitting out on the peripheral, which could totally turn this market into a massive sell-off. But unless that actually gets triggered, and for example, something outside of this throwing barbs back at one another, if the situation in North Korea escalates in a bad direction, I think that the markets will react. We'll see some, people just kind of getting either neutral or taking advantage of what may or may not happen. But outside of all that, I think we're just going to inch higher. I think that a lot of it rests on expiration. And one thing that I normally can do is I will go into the spiders. I will go into SPX options. I'll see where that break point is, where they're really trading it. So you start to look at the straddles. You start to look at where they're putting a box on. And I look at open interest, and I see how things are trading. And that's going to really help you. But again, we're trying to determine on Monday what we think the market's going to end up on Friday. And I really do think it's a coin toss, but I'm going to stick with higher. But as I think both Larry and Neil said, I'm not looking for very much. A lot of people that were waiting for these tops to come in, whether they're short term or the longer term. makes no difference. There's too many people that are going to bail and get short. So I think that I'm not looking for a lot because I think once it starts to go there, sellers move in.
All right. Yeah, I agree with many of the points you make there. And I'll expand on it when it's my turn. So Neil, tell us why it's going up. What do you got going, man?
Quick screen share. Okay, so these are a couple indicators that I use. Can you see these X's and O's charts? X and O charts?
Yes.
Okay, so this is what I learned as a broker. It was really great. About a month before I left, some people from the other office in town did a point and figure charting that they invited me to, and I invited potential clients, and I left, and they ended up getting my clients. But it was worth it. I learned how to do this, and how this works here is this is the S&P 500 % of stocks above their 50-week moving average. So you can see 26 to 83. It's really 0 to 100, but they never went that far. But what's really interesting here is you see these red here. So actually, there are less stocks trading above their 50-day moving average than week. So what this means is that there's less and less stocks participating in the rally. And so that's what makes me nervous. You know, you got Apple can account for probably the bottom 200 in the S&P. You know, if you add up all the market caps, or even more, maybe the bottom 300. So that's a concern that I have. Then if I look here, this is the bullish percent, S&P 500, and it's moved down from 78 to 72, and now it's almost 71 today. So these are stocks on near-term buy signals, also less and less participating. So sticks under the bridge. It's only a matter of time for something to happen. So if this keeps continuing lower, the market's just going to go down because the mega caps can't hold it up forever. And that's usually what happens with bull markets when they finally end, is it's the mega caps that do it. Starts coming, things fall apart under the seams. Nobody notices. And once the big caps roll over, that's when the indices really crash. So this is what I'm looking at here. But there are some bright spots in some certain sectors. I think, David, we should talk about that later. Or?
Yeah, well, you'll have a chance to give us your favorite trade idea after we get through the program questions here. That's kind of the last part of it.
Okay.
All right. Well, thanks, Neil. I want to learn about the point and figure charts. I've never studied it.
Well,
I'm always eager to learn something new.
The basics only take about 2-3 hours. Wants to put in the 2-3 hours to get really know them. That would take a couple books, and we're talking maybe 20, 30, 40, 100 hours and years of using it. But the basics take a few hours. Yeah.
Yeah, pretty interesting stuff. You know, that was funny, your opening comment about, you know, going there with your client. So, you know, the old axiom is, you know, showing up, you know, half the formula for success is just to show up. I guess the other half is to stay for the whole meeting, right?
You know what? When I was a broker, it was right out of college. And you doze off in class in college sometimes, you know. We had the CEO talking to us, and I look over at the table from my office nodding off all the time. I'm thinking, oh, God.
Yeah, that's awesome.
CEO of a publicly traded company nodding off like a couple of feet away from them.
Perfect. Okay, well, I'm showing a chart here. I've got the E-mini S&P 500 futures contract on a 60-minute chart displayed here. And, you know, the first thing we notice here is it's been in a really ugly channel going sideways since when? 25th last month. You know, for mostly for day traders and position traders, this has been sort of miserable if you're trading the index or you know, a trend, at least if you're a trend or swing trader trading the index or things that move with the index. But what's notable here for me is we are in this ugly channel. It's chaos. There's no patterns currently, but we do have a high up here right around 2401 or 2 or whatever that intraday high is back on. It looks like that's the 7th or 8th, right? And we failed right up against that, right under it. We have reversed and headed down, and I see that we're gaining a little bit down here in my momentum oscillator. The negative moves are gaining some momentum, right? And we're still up above the Ichimoku cloud. I do a unique thing. I combine Elliott wave and Ichimoku cloud, east meets west, and I find them to be, when they agree, it gives you some pretty high probability on trades and outcomes. So we're above the Ichimoku cloud, and it's predicting some pretty strong support. But this failure up at this previous high in this channel, right, and the fact that we're at what looks like the end of a fairly strong move that we had most of April, right? It looks like that's beginning to fail, losing momentum, and I'm looking for a correction to begin down to a Fibonacci retracement with a midpoint of about 2362. Probably not this week, right? But I think we're going to start pulling back, working our way down, and begin this correction. I operate based on, 2 hypotheses. One is what I call ungrounded, which is just what I think about the market. And I think the market, has been in a bull run for 8 years. I think that there's a lot of bad things that could happen in the world that could trigger a sell-off. And I also think that the current run-up since the election is based primarily on expectation, and the reality is going to set in that delivery on those expectations is going to take some time, and there's about 700 members of Congress that have to go along with the White House, and that's just hard work, and it takes a lot of time, and implementing policies and tax code and healthcare change, right? Agree, and then it takes a long time for the effect to be felt in the market. So those are all, environmental things. I place trades based on reality. What's actually happening in price action, right? The only realities in the market are price and volume. Those actually happened, right? And the patterns they form can become fairly predictive if a good pattern's there. If it's chaos like it is right now, it's a little harder. But when we see, waves of optimism, and then a correction of pessimism, and then the beginning of a new wave of optimism, that stuff's pretty real and pretty predictive. So I'm basing my prediction primarily, we're at the end of a fairly strong bullish run, on the short term from early April. We're consolidating, going sideways, and just had a pretty good failure against a significant high, and we're losing momentum. So I think there's a probability that we're going to close down this week. That's my story, and I'm sticking to it. And would welcome any. You guys have all contradicted. Y'all have different opinions already, but that's where I'm at. Any other comments on market direction before we move on to the next question? We're going to talk about gold here in question 4. But any final thoughts any of you have on just market direction, S&P 500?
Once everyone becomes extremely confident, I think there's going to be a big contrarian signal somewhere. I don't know when it's going to happen. Might be the next year or a couple of years, but when your neighbor's saying he's going to cash out and buy a boat and all these things, you got to start thinking, all right, maybe sell some covered calls, tighten up my stops, and it's the only.
Yeah. I mean, history tells us that this bull market will correct. We don't have evidence of it starting yet, but there's a good probability that it will someday. We'll get a warning, and it'll be fun, right? There's a lot of money to be made in a major market correction if you're on the right side of it.
Yeah, I got a comment actually. When I was a broker, the big book was Harry Dent, The Roaring 2000s. Does anyone remember that book? No one remembers it. Okay, yes, this was basically yeah. And so he was correct in how these move, but then all of a sudden, I mean, we're talking. This is 99,000. He has a new prediction for the Dow 40,000. I think by 2010. I mean, ridiculous. And then what happens usually with these guys? Make these bold predictions, and they're true, and they become famous. Then they'll make another prediction that's completely goes the other way. and then you never hear about them for another 10, 15 years, and then they show up again and they have another prediction, and most of the people forget. But I did see, and he had all his predictions based on graphics. So peak spending years, peak earning years, and that was moving the market. And I recently saw some research actually that the millennials are moving into the workforce, which are the kids of the baby boomers, right? So there will be more people going into the workforce, kind of pushing it up. And the research showed that PEs of the S&P 500 are higher when that happens. And I think that's pretty relevant, fundamental. You can't base everything on it, but I think it's a good fundamental to kind of have there, and that could last for at least 10 years. But then, what you had in 2000 was, baby boomers are starting to retire. Who's going to work? So baby boomers are retiring. Millennials are still in high school and college. Nobody's working. But now millennials are moving into the workforce. So I think that's a really good fundamental that could move the overall trend for, maybe 10 years, maybe more. So I think that's something that's happening for the bulls.
Interesting. So I guess here's the path to success: is you create a handful of personas and make some very specific predictions, and then whichever one's right, you go claim it, right? And that's your 10 years of fame.
Yeah, I've seen it happen many times. There's other people. I'm not going to name them, but I see these guys, and I remember what they said 10 years ago, and they were totally wrong, and they showed up. But some of these guys are really, they just made a huge bet that went really, really bad and kept doubling on it, and they just hope people forget 10 years later, and that's something you never want to do. All right, put in your stop losses when you have to.
Not to name names, but there's a guy with a very popular TV show who calls out stocks all the time, and his track record is lousy, but he's a phenomenal entertainer. I wish I had his on-screen entertainment skills and could get my trading results, and then I'd have it all. Anyway, gold. Let's talk about gold. So the question we'll just do 4A, 4B together, and that is, do you trade or invest in gold, some form? Could be futures, physical, stocks, ETFs, options. Do you trade or invest in gold, and why or why not? And we'll just stick with our batting order here. Larry, what about gold? Now, you a gold bug?
I'm not a gold bug, but it's a great thing to trade, and it's really great. It can really have fantastic trends, and it's very, very liquid. And the GLD is just a fantastic ETF, and the GDX and that. So a lot of great stuff, a lot of great ways to trade it. I mean, it's great for covered calls. Some of the mining stocks are fantastic for that, and GLD is just a great ETF for options. Very, very liquid, and once it starts trending, you'll have some pretty good trends and follow throughs, and really responds really great to Fibonacci levels. So I like it a lot. Intraday, or for more of the swing trade type setups. So a lot of different ways to play it, and the options are fantastic because of the GLD, and just a lot of different strategies you can use. I mean, the butterflies work great, ratio. I mean, just all kinds of great stuff can go on with gold. So I do like it a lot.
Okay, you're stealing most of my answer.
Oh,
no, I don't know what I'm going to say now. Michael, what do you like gold?
I love gold. I am a gold bug, and I've been a gold bug since 1980. I've been following gold, analyzing gold we won't do the math so you can figure out how old I am. But gold is one of my major trading tools, currently, I am finding that it is an extremely beautiful day trading instrument. And gold can find so many different reasons why it wants to move in one direction or the other. And often it has nothing to do with some of the stronger outlying fundamentals. And those fundamentals can also be tied to governments or sovereignties that are just really building positions on the long side due to perception, due to unrest. Political change can really cause it. War, of course, will draw people into it. U.S. interest rates weigh very heavily on it. How the dollar versus the euro moves weighs very heavily on gold's direction, and often that will be an intraday direction. I do keep a core position in gold, and so that's usually I use futures, and then just to kind of manage that position, I will put depending on where I think it's going to go, where I think I will need the protection. Right now, it's long future, long puts. That's like the long term. On the short term, I'm just a straight futures trader. Which is connected to an auto trader that I have developed. In fact, that's what and I'll get into that a little bit later, but that's what I use pretty much across the board. I don't really do discretionary trading as much as I used to, because I really like algorithms that just kind of sit and do what they need to do according to how I've set it up or programmed it, and I don't have to sit and through the noise. So I really like the auto traders, but I use an auto trader in gold. And for example, today the auto trader got short at 1234.70 this morning, and it's still short. So yeah, and so when you can collect that type on a one lot, when you can collect bucks, makes for a good day. Really, I love gold, and I think it's a very important metal to understand how it's used in global economies. And I could go on and on and on, but I don't think we have that kind of time today.
Yeah, good. Thank you. Neil, what about gold?
Yeah, we've traded gold many times. I remember when it went up to 1,800 and broke down to 1,500, told everyone to get out, much to waving emails that I received from people telling me I didn't know what I was talking about. I'm crazy to sell my gold. Yeah, it's pretty easy to trade, to be honest. Like Michael, I think he said he's long the puts. I don't think gold looks very good right now. I think it's rally for a little bit, and we're actually using that to get out of a position. I'm just gonna. Whoop, where'd it go? Hold on, sorry. Yeah, gold here. Look at all these resistance lines. Gold has to come through. And I think the price of gold is based on deficit growth rates. And the deficit grows every year, but it's not growing at the same rate as it used to. Was shooting up 300 to 1,800. So you can have good trades on gold, but I think it's, as the market goes up, I think there might be less and less opportunity to trade gold like there was in the and all right. I think if silver hits $10, might be a good time to buy some coins, but probably have to go as low as about $10 to do that.
All right. Hey, thanks, Neil. So I like gold. I'm kind of like Michael in my enthusiasm for it. My favorite thing to trade is anything that has a great setup, right? That meets my rules and has a high probability. Again, I use a Elliott wave and Ichimoku cloud together. So when I get a super high probability trade, right, with the next impulsive wave, clear evidence of a beginning, I got a good reward to risk, I got clear risk management levels. That's I'll trade anything that's got a great setup as long as it's got a liquid market, right? And I can get good prices and get out when I want. But if I were forced to pick one instrument to trade with, it'd be gold, for sure, right? Just the volume. It's an orderly market. It typically moves. There's all these instruments, GLD, GDX, options, futures, right? I've traded some of the individual miners, and that's really good fun. We've done well. GDX is a great short-term.
No OPEC.
Yeah, no OPEC, right? Yeah.
Yeah,
My
it's
favorite.
so much better, in my opinion, than oil. Because of what you said too, because you've got so many different more instruments. And the liquidity, the GLD ETF is fantastic versus trading a USO or something like that.
Right.
Mhm.
I think maybe it was you, Neil, who said you used some 3X. Some of the 3X on gold have been tricky, and and I don't know if they're great long term, right? I know some of the leveraged ETFs, they the way they settle is different, and you got to be careful about trying to take long term positions. So yeah, I like
Yeah,
individual miners, GDX, GLD, futures, options on the equities. So yeah, maybe if you have some thoughts on those leverage dudes, that'd be cool.
yeah, we did it once. I used the bullish percent on the gold miners, went all the way down to 0. So 0% of all gold mining stocks were on near-term buy signals. It started turning up. So we went into Nugget, NUGT, the triple leverage gold miners. And yeah, I remember there were 2 in there where gold was up and the leverage was down, and it was acting strange. But then maybe 2 days after that, it really took off when gold was up, and it was up at least. So it's not going to be perfect every time. And there's a weird one with oil. If oil is not in contango, then the triple leveraged oil ETF acts funny. I think maybe you know something about that as an oil expert. I was warned on that. Contango is when the fuses.
Yeah, the ETFs
Yeah.
like USO, they're gonna lose value because of that contango, because they have to roll every month. So
Yeah, right.
you lose value. So it's not one that it's a hard one to trade long term, the ETFs.
Yeah. Yeah.
Mhm.
Yeah, but there can be some great shorter term trades, when you spot a move. Yeah, but
Oh, absolutely. And the UCOs are great for short term trades for the options. That's the leveraged oil ETF. It's not as liquid, but when you nail it, you can really get some really quick profits on that.
That's a
all right.
Good.
Good.
Also
Good
keep
discussion.
in mind, I'm sorry, Dean, I'm just want to interject. I do like the triples. I like the doubles on an ETF, but you have to, I think they're really being used by a lot of market timers. So they may want to be long gold, but to hedge that trade, they're going to sell the either double or triple against it. So if they're wrong, they're going to make up. So that's why you kind of can see that reverse action. It's giving you a buy signal, but then the underlying follows through on that, but that particular instrument gets stuck. Because I think it's the way a lot of traders are using it.
Yeah, I know there's some weird stuff about it, so I'm a little leery of those leverage deals. Okay, well, hey, this is the time. It's good. Everybody likes gold. Sound like nobody doesn't like it. So this is the time in the show where you lift your skirt just a little bit and give us a trade. What do you like right now? What's your favorite thing to trade right at this moment? And probably want to be as specific as possible. So back to our order, Larry. This is where I get my pencil out, man. All these smart people, man.
Well,
What's the winner?
Yeah, sorry. Yeah, so one thing that I like is Alibaba, and it's got earnings on Thursday, and just as a kind of an earnings trade into earnings, be out of it, before close of business Thursday. But I think there's potential for Alibaba to push a little bit higher, just from a standpoint of trending into earnings. So we've got earnings coming up here on the 18th, I believe that's Thursday. And so, we set some trades up here Friday when it was trading right at 120, and just looking for a grind, or actually could get a pretty good pop higher, and go from there. Just kind of what I call a pre-earnings trade on Alibaba. So it's been a fantastic uptrend, and I think you could get a little bit more pop to the upside. So that's a trade that I like just for a trade for the next 1 or 2, 3 days maybe. So Alibaba.
All right. I just got to jump in. I like Alibaba too, and I like it. I said I use Elliott Wave and Ichimoku Cloud together. So here's a big wave 3. There's a perfect 4 correction. We caught wave 5 as it broke the cloud. We got into this back in late January at 106 cents.
Nice.
We're still in it. My stop is sitting here at 118.24, and I'll stay with it till I'll just keep trailing up to new support levels till we're out. So I like Alibaba too, man.
Yeah, and it's also a really great underline to trade for. I like to do butterfly type trade setups, and it's really good for butterflies.
Yeah, look at it, man. It's a fairly orderly market. That's what I like about it.
Yeah, exactly.
It's doing great. So
yeah,
I'm in agreement on that one, and that's been a good one for us. When we close this, it's gonna really help the year's P&L. It's gonna be one of the big ones.
There you go.
Yeah, and I take a straight directional. I just take straight directional positions, so trading it with calls.
Yeah, I mean, look at the moving average here on the weekly. I mean, if you look at that, that's just a beautiful trend, isn't it? Look at that. Wow.
Yeah, good stuff. Good stuff. Michael, what do you got? What do you like?
I love gold and I love crude. But I'm basically, in those particular markets, I remain a day trader. And again, I'm using algorithms. So I can't specifically say, here's a trade. They investigate my algorithms. And if you want to put them to use, to work for you, you just kind of sit there and but thank you, Larry, for bringing up Alibaba, because I just pulled it up. And when I trade options, I am a volatility trader. I love to sell premium. And so I'm looking at the volatility and I'm seeing that the earnings you said are on Thursday, Larry?
That's correct. Yeah. So the volatility's shot up into earnings. That's the other reason I like it. Implied volatility probably keep creeping higher. So that's good for buying options right now.
But there's a choice here because we have the monthlies expiring on Friday. Leading up to that, they might get the biggest volatility pop. The weeklies and the May 26 weeklies are also getting a nice pop as well. But if you stick to the Mays that are expiring this week, there's going to be, I think you can find quite a few. I like the Iron Condor ideas. You're going to have to pick how you want to box that. But the goal would be to, there's a plus or minus right now of almost 6 to this going into earnings. So I would pay attention to how that is shaping up towards Thursday and look maybe on Wednesday to put a earnings play on. And it would depend on how the volatility is and where I could wrap it around. Am I going to wrap it around the 121 strike? Are we going to have to look at the 22 or 23 strike? And then you kind of have to get your estimate into what the estimates are for the earnings. And if we're looking at something where the stock is expected to move between $5 and $6, or you can put it on and just, it is a defined risk trade as well. Come out a hero, or you're going to take your hit, but it's very defined. So I like looking at that, and so I would stick with what's already been presented, and that Alibaba is going to present some good.
All right, thanks, Michael. You're breaking up for me just a little bit, but I think we caught the gist of it. Neil,
Okay.
what you got for us?
Here's one right here, 3-time semiconductor ETF, and sent this out just a couple days ago on this breakout here, and it kept sneaking away from us. So, but we finally got in. And what happened in the 90s when rates started going up? I still remember the tech companies have billions, hundreds of billions of dollars in cash. And guess what? They make interest on that money in the bank when interest rates go up. other companies, have to get loans to do business, So we got Trump as an industrialist, and at the beginning, U.S. steel went up crazy. I gave it away in this show, up 65%. Tech was lagging, but now interest rates, at least the perception is they're going to go up, and they're going to keep sneaking up, I think. Technology does great with high interest rate environments. As long as the economy stays okay, it's a good place to be. So the semiconductors, I think, is the best place to be. And I think I also had the NASDAQ up here. I don't... $sign. Okay, well, I forget. What is it? Comp? NASDAQ's going to outperform the Dow. Yeah, so here's the NASDAQ breaking out nicely. So tech is a place to go. Tech's a place to be.
All right. I've traded the SOX and did pretty well on that before. Yeah.
Only I'm allowed to trade the SOX. You can't.
Okay. I got no call on that one right now. I do got a tech stock here though, a tech stock that I'll share. And this is a FireEye, symbol FEYE. So I use Elliott Wave, and we had a clear impulsive bearish wave, right? They got beat up from over $50 down to a low of about 10, channeled forever, and now it's breaking out into a corrective wave. This would be a wave 4, and the Fibonacci retracement zone is from about 26 to $35, these two blue lines. So I got my price target set at the bottom of this correction zone, and we got all kinds of clear evidence that this trend is starting to get it on. We've broken up through the Ichimoku cloud. If you think about Dow theory, we've put in higher high, higher low, new highs. We've got growth in the growing momentum in the price oscillator. So everything's a go for me, and I got a great reward to risk ratio. My stop's at this red line right here. I'll be trailing that up as we establish new support. That's at 1203, and we took an entry on this one about a week and a half, 2 weeks ago at 1423. And coincidentally, FireEye is a provider of industrial cybersecurity software, and so no surprise today it's up almost 10%. I wouldn't wish a cyber attack on anybody, but if there's going to be a cyber attack, I'm pleased to be long a cyber solutions company, right? So we didn't know that was coming for sure, but hey, we're up. We're already in just about less than 2 weeks. We are up 16.5% on that position. So pretty happy with it, and it's got some legs, and I think people can still get in. Gapped up today. It'd probably be a pullback. There'd probably be a pullback. So I maybe would wait for a little pullback. You could go in now, but I might wait for a pullback, see if you can get a little better entry on it. So pretty happy with this one, of course, and think that's still got some great potential. Again, this is just a retracement, and the fundamentals of the company, I don't care. Right? I'm not a fundamental trader, right? But this thing could rally up into this retracement zone simply based on people covering the shorts. Right?
Yeah, I think up to 30 almost. I'm looking at.
That's kind of the midpoint. The midpoint of this is $30, midpoint of the wave 4 correction. So we like it. I think there's still room. Again, I might wait for a little bit of a pullback there to try and get a better entry. And there's a pretty decent option market on it. So I'm long the calls on this, and about 90 days out on them.
Nice, it's a great trade.
Yeah, thanks. We're liking it. All right. Well, hey, we're getting close. This has been good. So this is where each of the panelists, if you just wrap up, if you got a link or a website or something you'd like to share with the folks watching the show here, this would be when you do that. So one more time around the table, Larry.
Yeah, thanks again for having me here today. And just go out, check out my site, powercycletrading.com, and that's powercycletrading.com. And my name's Larry Gaines, and join us for some directional trading with options. So again, thank you for having me here today.
All right. Hey, thanks for being here. Appreciate your contributions, your ideas there.
Thank you.
Michael, you anything you'd like to wrap up with?
Sure. My website is logicalsignals.com. And right now, like I said, we're switching our host server, so we should be done with that this week, I imagine. And then the website will be, again, back for us. And my intention is to begin, I provide daily analysis, but it's actually analysis of how we traded on that particular day. But then also some commentary about maybe what's, involved in our markets. So that'll be every day. I have also 2 algorithms that I put out there for people to use. I have a trade room, but the trade room right now is basically set up to help people that have purchased the algorithms, and then also for coaching. And so if someone were to be interested in coaching, then I normally will provide access to the trade room where a lot of that coaching takes place, because we're doing it live. We're doing it as we are trading. And we work through a lot of the emotional problems that experienced traders and new traders included fall back into, and they can produce some pretty bad habits that can be very defeating. So I provide coaching, and through my trade room and algorithms, which also we provide that coaching also through the trade room and on an individual basis.
All right. Very good. Very good. Thank you. And Neil, if you got a website or a link or something you want to let us know about. Oh,
I think
okay.
Thanks for being on the show today. And technology is the place to be for many years, I think, and semiconductors are the best place to be right now.
All right. All right. Very good. Thank you. It was good to be on the show with you. Thank you for your contributions. All right. So I've got my website showing here. This is followmetrades.com. I'm the guy right there. That's me. And we offer a stock advisory service, have some training, got a live trading room, and some coaching. There's a good way for people to maybe get to know us is we got a free newsletter. You can just on the webpage, on the homepage, or you can sign up for the weekly market commentary with predictions and some training and information. So it's a great easy way to find out more about Follow Me Trades. But invite anybody to go to the website and check it out. And I think we're about done. We brought it in right on time, covered the agenda, had some good content. So I think we're done. And David, thanks for inviting me back to host again. I sure enjoyed it, and I'll turn it back over to you now. Do we have David?
It shows that he's still here. I'm not sure why he's not talking.
Yeah, he's got an icon. Okay. Well, the show's over, so people can go ahead and log out.
Thank you very much. Have a great day, everybody.
Yeah.
Ciao.
Thanks, panelists, for showing up. Thanks for the folks viewing it. Thanks for being here. And David will be sending a recording out. I think he's got an audio version as well as the video version now. And maybe he's having microphone problems, but that's what he always says. So thanks again, and we'll catch everybody next week or the next time we're on. All right. Take care.
Thank you. Bye.